Just take a leap of faith. Just take a leap of faith. Just take a leap of faith.
Leap of Faith podcast fans. Welcome to this week's episode with yours truly, Randy Silver. This week is going to be around the stock market. We're going to do a 2020 stock review and also looking forward to 2021. My guest and I, as a formal warning, we're not financial advisors. We're not financial experts. This is just everything that we see in our daily life in trading stocks, buying stocks, talking about stocks. The people on the call are actually all my coworkers. It's awesome to talk about it. You've heard me talk about stonk watchers a couple times on this podcast with different people. We have some friends of the pod back as well. Stonk Watchers is our group in our internal chat where we talk about stocks, what's happening in the market day over day. So on this call, I have two friends of the pod who have been here before. Jessica last when she talked about her nonprofit, Hope for Yourself. Natalie Skeel when she talked about buying her first home. And then we have new people of the pod this week, Scott Cooper, Sam Tabachi, and John Kim. So these are the groups and the Stonk Watchers. So without further ado, let me just go alphabetical order and everyone introduce yourself or reintroduce yourself. Where do you live? What's your favorite thing to do during this holiday period as we just had Christmas? So we'll start with Jessica, and then we'll go John, Natalie, Sam, and Scott. So Jessica, welcome back to the podcast. How was your holidays?
My holiday was good. I basically relaxed the whole time and read books and slept for a lot of the holiday.
How is Hope for Yourself going?
It's going really well. I actually just did the balance sheet today, and we're in the positive, so that's good. I paid off everything that we kind of put into the business, so we're right at neutral right now, so that's exciting.
Congratulations. That's awesome.
Thank you. Yeah, that was exciting to see that. I was like, wait, we're in the positive. So that's good.
And hopefully we'll be positive when we talk about stocks as well. John,
exactly.
Welcome to the podcast.
Yeah, thanks for having me. My name is John Kim. I live in Lehi, Utah, which is a little south of Salt Lake City. I'm with Cisco, working as an account manager, and happy to be here to talk about stocks with everyone.
What was your favorite thing that's happened the holiday so far?
Favorite thing? Just taking a break from everything. Just, not having to follow a schedule, but just to kind of relax and do things as I please. And so I think that's been the best part.
Fantastic. Thank you for introducing yourself. Welcome back to the podcast, Natalie. Great to have you back as well.
Hey, everyone. Loving the new house. It's been great. I'm down with my family in Charleston celebrating the holidays and had a great holiday. Hope everyone on the podcast did as well.
Awesome. Is there anything with the new house that updated us since last time?
No big updates since the last time, just living in it and enjoying it.
Awesome. Thank you so much. Everybody welcome Sam, and then we'll welcome in Scott. So Sam, welcome.
What's up, man? Thank you. Hope everyone's doing well. Sam Tabuchi. I am a professional nomad at this point. Well, going into 2020, unemployed, but absolutely loving it, especially spending time with family, and hopefully going to be doing some rehab on this knee here shortly.
What happened to your knee?
Tore my ACL just before Halloween. Gonna hopefully try to drive cross country in the next few weeks and then get it repaired and then move on with my life.
How'd you tear it?
Flag football, just being an all-star out there, post-collegiate athlete type of situation where I'm out of shape but shouldn't be running around type of situation,
Well, I mean, I was in college and I tore my ACL playing collegiate lacrosse, so it doesn't matter if you're an athlete or not, but off podcast, if you want any advice or just anything around surgery, rehab, I'm happy to talk to you about it.
Perfect.
And then lastly, I would call Scott the expert in this group, the one who's really helps all of us. Welcome, Scott, to the podcast.
Instant credibility. I like it. Nice to meet you, everybody. My name is Scott Cooper. I'm a cybersecurity specialist at Cisco. Just up here enjoying the freezing cold temperatures just a little bit south of Yellowstone. We're in Idaho in Island Park. Just having some fun times during the holidays.
So you can see here that all of us are around the country, and that's the beauty about today's world, especially a lot of people who can work virtually, is we can stay connected through our internal chat, virtual meetings like this, and talk and help each other out. So thank you, everyone, for introducing yourself. Without further ado, let's get into it. Scott, being the resident expert, let's say I'll start with you. I know we have a lot of people on this, so I'll kind of be the moderator here in round robin. If anybody has anything they want to pop in and talk about, please feel free. No problem with that. Let's start with our 2020 wins. So Scott, for you, what have been your best stocks? And maybe if that's a little too narrow, what's your best sector in 2020, especially as 2020 started off high, the stock market crashed around March when everything started getting locked down, and now we see at the end of 2020, it's really at new highs it's never been at. So how has 2020 stocks worked for you, and what are some of the stocks that have been most successful?
For me specifically, I was kind of looking at the stocks of, okay, what can people not do now, but there's still the demand for? So the approach for everything was basically restaurants, travel, things like that. That was kind of my focus going into it because they were absolutely just wrecked once the economy took that spiral down. And so I went immediately into like the cruise ships, for example, Royal Caribbean, Carnival Cruise Lines, and Norwegian Cruise Lines. That was kind of the start of it. And then it was things like Ryman Hospitality Group, a lot of the hotels, Wyndham, Red Robin, and Cheesecake Factory. I just figured, hey, those are long-term ones where I can say, hey, you know what? They're not going to turn any money for me right now, but once the ability for people to go back and go on cruises, be able to fly on planes, and to be able to go out to restaurants, that is going to be the long-term play. Those were probably my biggest, those were what I kind of see as my potentially biggest long-term winners. Granted, with the cruise ships, I bought them right when they were really, really rock bottom. I just couldn't see anything left. I was doing a lot of research into who was owning those cruise ships. So basically it was viability. Can they survive this? And when I was going through ones like Royal Caribbean, for example, they just had, and Carnival Cruise Lines, there's just so much financial backing that I could not feasibly managing. They were going out of business anytime soon. Plus, they had enough assets to sell if they needed to. So I went ahead and bought all those ones. But luckily, in 2020, those have been my stable winners. They've been really good ones. On top of that, some of the the real scary ones, just the really just dumb ones where I just got absolutely lucky, was like Neo, Ideanomics, Workhorse was probably my biggest one. Workhorse, I believe.
That
Let's
one's
see.
great. I'm glad you gave me that advice. Workhorse was great.
Yeah, Workhorse. So I bought Workhorse at 3.7. I sold it at 26. So I made 686% on that one. And I did that in about 2 weeks. And it also just turned into just money that I was making from other stocks that I would just say, you know what, I'm just going fully into it. Let's just go real stupid. And then it got to the point really around, I'd say late July. It just didn't even feel like it. Maybe it was just working from home, being remote. Nothing ever seemed nothing seemed real anymore. And so then it was like fake money, magic numbers, and I was just putting it wherever I felt like it. And actually, if we could, we should probably segue over to the real sage of this is Natalie. Natalie is actually the one that got me to break out of the shell of some of my safe and easy choices into some of the real fun ones, and those have been where I've seen a lot of the wins as well.
Awesome. So Natalie, since Scott invoked you in, let's bring you in. What are some of the fun ones that Scott talked about? And it sounds like Scott's a little bit more of a safe stock investor and you potentially are a little bit more risky. What gives you the opportunity to take that risk, and how do you feel comfortable taking that risk?
You keep me humble. You all know this. I mean, your listeners will not, but they will now. I love the Motley Fool, so I subscribe to their Best Buy list, and that honestly sways a lot of my investments. But my two best from the last year have been Tesla and Shopify, well over 100% gains for both. I think Shopify will be a good one this next year as well. I think it's honestly just looking at what people use and what people need and how the world's changing and trying to make decisions based on that. I think if you're investing based on what, your friends are doing and what your family's doing and what your, friends need and the systems that back those, you're probably going to do well in the stock game.
So let me ask you this question. Shopify, you said it's doing really well. Say you get in, it's $5. Again, Shopify has never been like that small. You see it go up 200%, so now it's at $15. Do you continue to invest money as it goes up, or do you just stay with your basic investment and just see how high it will go?
When I started investing, and this was only at the start of the pandemic, so I haven't really been a long-term investor. It's a newer thing for me, but when I started investing, I would do pretty even splits between all the stocks. I think it was like $1,000 for each that I was investing in. Now I feel like I'll look at it and I'll say, oh, these ones aren't doing as well, and I'll take the money out, and maybe I'll add it to some that I think will continue to go up. But it honestly just depends for me. I don't know what some of the other stonk watchers think, but for me, it just depends on what the stock is and how I think it's going to continue to perform.
So let's bring in John, and since Natalie invoked someone else, so we can move it a little bit. John, what is your philosophy? What's worked for you? What hasn't worked for you?
I think for me, I try to have two different outlook. I try to have some stocks that I know I'm going to keep for long term, as in like 10, 20, 30 years. Stocks that I know I'll probably sell when I'm about to retire. And so those are like the real safe ones, not a lot of gains immediately. So I try to buy those a little bit too and balance it out with some of the ones that I know I will have some quick wins, but then also that I also think there's potential long-term growth as well. And so I think even for those, the ones that I think will have a quick gain in a few months or weeks, I still try to think about, what's their sustainability in 10 or 20 years from now. And so that kind of mindset has shifted from like oil industries to more tech and more, I guess, renewable energy. And so QuantumScape, I know I've been singing that name for weeks, but I was super excited for their IPO because I read an article that they were backed by Bill Gates. They had, real good backing, and they were capable of building a battery that could recharge super fast. And because that's kind of the only downside of Teslas or any other electric vehicle, right? So I knew that they were going to IPO, and so I've been looking forward to it. And as soon as they IPO'd, I just bought some and not realizing how fast it was going to go up. But it ended up going, I made over 200% on it already. That's one where I kind of feel proud of because that's the one that I actually told my dad. I was like, hey, Dad, you got to buy this one. And, as a son, you like want to have that credibility with your pop. And so this is the one that kind of was like, okay, son, like now I recognize you as someone that I could, somewhat trust. And so I'm grateful for that. And so, and again, QuantumScape, I feel like that industry is only going to grow 10, 20, 15 years from now. And so those are the ones I feel like I've been kind of levitating towards. So,
but as you talked about, it's so smart. Like if they're making EV batteries and they're the fastest on the market, we see Tesla's boom, we see the boom of renewable energy. Market's only going to get a higher market cap year over year. So it's important to invest now. Great that it's shot up 200% for John. Some companies aren't like that. But as he talked about 15, 20 years down the line, you'll be loving the fact that you invested when it was super early and just let it ride. Sam, how about yourself?
A mixture of kind of everything that you guys have talked about so far, but I also played in the penny stock market for a little bit when I first got started just because I saw how volatile it was. Made a little bit of money there, not crazy money, but it was a lot of fun. But would not recommend playing penny stocks to anyone here listening. Mainly,
hey Sam, can you tell the audience what penny stocks are and how it's different than the normal stock market, just to make sure everyone understands?
Penny stocks are cheap, explosive stocks that may ride, from a few pennies to a few dollars. You get in early, you make a ton of money, but there's no real backing to why this stock is pumping up. So there's just not a whole lot of value in penny stocks. They're quick to jump up and they're quick to drop back down and be worthless for a long time. So I definitely would not recommend unless you feel like gambling. But pretty much I played in the cruise line sector. I was covering cruise lines at the time, saw what was going on, saw an opportunity, took it. Recently cashed out of that, looking to get back in here soon. Also played Tesla like a lot of us. But I do a lot of swing trading, so I like to catch the way up and get out before it hits the top. So that's kind of where I'm at now. I'm not professional by any means, but probably going to get here into renewable energy in 2021 as well as Tesla again.
Awesome. And then we'll bring in Jessica. Jessica is probably the newest of the group. So Jessica, what have you learned in your short time in stocks, if you have anything that you'd like to share?
So I just kind of started with Robinhood, but prior to this, the only thing really from stocks-wise I've invested in is just the Cisco stocks. And then I have an IRA and a 401k, and that's about it. So that's why kind of this year I'm taking to go more into the, just learn more about investing, the stock market, different things like that, and just playing around with my Robinhood account.
Awesome. And then for me, everyone already kind of talked about it. The biggest performer for me this year was Tesla. What I'm banking on that no one else has is the gambling industry. As the US gets gambling more acceptable, you see states legalizing it. I'm putting a lot of money into Penn National Gaming. They own Barstool Sports. They have casinos around the whole US. Same with like DraftKings, same with all these type of gaming companies. 15, 20 years down the line, when all these states now have it regulated and they have it legal, me getting in super early is only going to be beneficial as they start making more and more money. We see gambling is super huge worldwide, especially, in Vegas, Atlantic City. So when all the states can start taxing people and doing it and people can invest in their states, that's where I'm banking my long term. As like other people already said, what I'm doing short term, Spotify, being able to have people buy products online when all the brick and mortar stores are closed, huge so far. Square is my other big one this year. I'm up almost like 200% Square. Why? Because you can do transactions online through Square, and also Square is investing in Bitcoin and the whole cryptocurrency market and using cryptocurrency as a form of actual currency, not just US dollar. So that's why getting in now early, if cryptocurrency really becomes a new way of transacting money 5-10 years down the line, get in very early and we'll see high results moving forward.
Yo, Leap of Faith fans, as you heard on episode 1 of this podcast, Aware Apparel is an apparel and media company that aims to make meditation more accessible to the masses. Through their podcast, the Aware Audio Experience, they explore the role of mindfulness and meditation in today's society. Through their website, they offer a full suite of sustainable bamboo clothing and other mindful accessories like aroma bracelets and essential oils. You want to feel and look like $1 million? Well, guess what? Use our exclusive promo code LOF10, LOF10. Go to their IG at Aware Apparel, AWEARAPPAREL, or their website, aware-apparel.com. Again, don't forget to use LOF10 for those exclusive deals. Go get it, Aware Apparel. You're the best.
Say you check your stock market app and then you have a red day where you're down $1,000, $2,000 for the day. How do you deal with that stress or that anxiety, maybe stuff that goes wrong with it, to like understand there's going to be highs and lows, and hopefully, knock on wood, stocks always go up, as Dave Portnoy says, but we know that's not true. How do you deal with that and not let it affect your mindset of the day, for the week, your emotions, things like that?
So for me, for example, once it got to the point where it was, so the original money that I put in had multiplied, exponentially. That's when I just thought, well, it's not really money that existed anyway. So it falls under what my wife calls magic numbers, where she says, well, it didn't really exist in the first place. So who cares? If I lose it, then it was never, there in the first place, because our initial investment amount is just nothing compared to where it's at right now. So when I do make, no different than me going out and buying like, 2 PlayStation 5s or something like that. It's just, hey, it's a waste of time, waste of money for me. And it's something I wouldn't have ever used anyway. So that's kind of my mentality into it. If I do have a day, and there were quite a few, especially kind of late summer, where you'd have some really, really down days, or even 3 or 4 days where the stock market would just go down quite a bit. I never really cared, because overall, it's not really something I'm trying to, with the exception of a couple, I'm not trying to make quick trades or make a quick buck. I want to be able to put enough of my money into this that when I'm looking, 10 years down the road, it can be able to be a lot bigger. And so I don't really fret kind of the smaller stuff. But again, it's because the amount that I have now, in some of the things that I've been playing with, if it goes up by 5%, yeah, the dollar amount it's quite a bit now. But when it goes down by 5%, it's it's like it's not really, was never there to begin with.
Natalie, how about yourself?
I think for me, there are like 2 mindsets to stock investing. So there's, on the one hand, it's like day traders, or like Sam mentioned earlier, penny stocks, where you're looking at a stock and seeing how it rises and falls in a day. And then there's also like long-term investments, which is where I play more. So those are stocks that you want to hold for at least a month, 2 months, 3 months. I don't have the patience, like John mentioned, to hold them for years and years. Like, I want to move stuff and keep it going. But I think I don't really get so stuck on the day-to-day, just because, it's the stock market. It goes down, it comes up. It's kind of a gamble, but I think if you're smart about where you're investing, you're going to end up making money in the long run. I would imagine if you're doing like more day trading stuff, you're probably going to be more stressed on a day-to-day.
I'll be honest, like when I see red, I kind of freak out. Even though I'm not putting in big money like Scott is, I still like, when I see some red, I'm like, oh my gosh, should I sell it? Should I sell it? And like I constantly have that mindset. But when I have like that temptation to sell it because it's dropping, I always pull up like their 5-year report. Because if you look at their 5-year report, you see it, you see it going up, you see it going drop, you see it go up, back up again, and you see it constantly going up. As long as it's a company that as long as it's not dropping because they made a huge mistake or whatever. But if it's just dropping for no reason and there isn't significant news around it, then you can be assured that hey, it's only going to go up eventually. And so I always try to pull up something in a 5-year report or 10-year report, because if you look at Tesla's 5-year report, you see that hey, like people who sold it when it was at 1,000, sure they made a lot of money, but if they held it to now, they could have made even more money. And so that's kind of the mindset I try to have is, hey, like let's look at the long term because you're gonna make more money on it. And as long as it's nothing significant that happened around that company, then I think you're safe.
Yeah, I think that's a good point. Is like sometimes you open up the app and you'd be like, what the heck? Why is it down 5%? There's nothing in the news. There's nothing going on. Like, this makes no sense. And it's just people, as you just said, selling off to try to make some money. So if you're in the long-term game, you just got to let that happen and know and have faith that eventually it will go back up. Do you have anything to add?
Well, it depends, right? So if we're looking at penny stocks, which I rarely, let me preface that. I rarely play in the penny stock market anymore. That was just really at the beginning, having fun gambling. But generally, I like to, when I go into a stock and the swing trading that I do, I look for companies that were beat down after like earnings or whatever. So say Splunk, right? Splunk had a pretty big hit after the earnings came out. They're moving to a more cloud transition, like software focus. So they missed by like 11%, I think it was. I look for a stock like that I know it's going to come back. Splunk's not going anywhere. It's a huge back end system for a lot of big Fortune 500, Fortune 10, Fortune 5. So they're not going anywhere. They're beat down. I think they dropped, I don't know, 45, 35%. We've had some red days since I've bought in, but knowing the fact that it's Splunk and they're going to come back kind of keeps me assured. I do get nervous though when I am in more volatile stocks that do take larger hits, like more than 10%.
Perfect. And so I think this is a good transition to the last part, this kind of talking about 2020 before 2021 is, you said people selling stocks across the board, things like that. What happens when you sell stocks? Obviously, there's capital gains, there's taxes going on. If you've never really sold stocks before, maybe you usually get money back in your taxes when you start playing with stocks. You're probably going to owe taxes and things like that. So I think, Scott, we'll start with you. You seem to have the most experience with this. How does that work? Is it proper to get, TurboTax to do your taxes, or at that point do you need a proper CPA to do it? Give some insight to what it would take from a taxation standpoint with stocks. Full disclosure, we're not CPAs, we're not financial accountants. Every situation is unique. This is just us talking about what we've seen in our personal life. Continue, Scott.
So for me, I have never in my life not paid taxes, especially because for a long time since I was a baby, my parents had, my dad's a long-term, now retired employee of Intel. So we've always had Intel stock and things like that growing up. And when we've had to sell it or buy it for various things, college and whatnot, I've always had to pay taxes. The kind of the rule of thumb that my dad has always told me is that whenever you sell stock, always keep 50%. So half of whatever you take out. So if you want to sell $100, actually take out, plan on everything being $150 and just plan on it, because even though you're not going to pay that much in capital gains taxes, you just, as a safety net, just for anything else, just always take out 50% more. So for example, if I was to go out and get a car for $100,000, I'd always make sure that not only are the taxes and things like that for the car being purchased or being covered, but for the taxes and on the capital gains, then I always make sure, okay, I've got $150,000 to cover for that, because in the end, you're still going to have to pay taxes on whatever you sell. So for some things like GoFundMe and things, you've got these taxable events where you're not actually paying taxes until that money is being transferred to a bank. It's not the same with stocks, because you'll get from Robinhood or from Schwab or TD Ameritrade. They give you the 1099 that gives you the breakdown of how much you won, how much you lost. Obviously, your losses will offset your gains, but hopefully, if you're not terrible at it or just making really crazy decisions, then hopefully you'll always have gains, and that's where it will give you the breakdown on how much you have to pay. With all of that, I have never done my own taxes. I've had the same tax person for 20 years now. He's always a good family friend. He's always done our taxes. He's a guy that's just out of Salt Lake City, Utah. And I've just always known, even when I was working overseas, just no matter what, even when I was getting paid in a foreign currency, just make sure that he's always the tax guy. So that's what I've never, I can't see I've any personal experience of, loading up TurboTax or anything like that. I honestly don't know, other than just whatever mail comes to me. I just fax it over to him, or copy or scan it and send it over to him. So I don't know as far as the breakdown goes, but I always make sure that no matter what I sell, I always plan on just 50% more, and then whatever's left over again goes into that free money, and then it gets put back into the market.
So let me ask you this question. I'll bring other people in. So Scott, to continue that, what if, say, it's $100,000 and then you only have 110 in your bank account, but your taxes end up being you need to do 50,000, so you owe 40,000 more? Do you sell stock then to have to then pay for it, and then that means that next year you get taxed again, type of thing? It's a mindset there.
Yeah, and love to see, I've never had that personal experience, just because if I'm selling some stock, it's usually to sell it so I can parlay it into something that's lower price that I can then reinvest in. So I've yet to have a situation where I don't have the funds to play with what I'm trying to do. But essentially, yes, you would need to make sure that there is funding, because sometimes even when you're making a trade where you don't have enough in the in your account, it will typically give you a warning saying, hey, you've got 48 hours or 24 hours to transfer some money from your bank. But when it comes down to starting to pay those taxes, yeah, you're going to have to find that money somehow. But in my experience, though, it's a good problem to have. You're paying taxes on money that you've made in spades. So, even when you're considering selling something within a year, so you're paying the max of your capital gains, which is based off of, the highest tax bracket that whatever you're part of at the time. You're paying that. It's still not it's not a bad thing, because you're paying essentially just, you're paying for winning, and it should feel pretty good. Although, nobody likes paying taxes, but when you're getting, when you're actually having to pay, that kind of is a badge of honor. You're saying, hey, I did so well, taking shavings and turned it into a pile, that then kind of paying back into the system is kind of a thing of, okay, at least for me, it kind of makes me feel like a big kid. I pay a couple extra $100, but I made, a couple tens of thousands of dollars on something that's outside of my daily job. It's pretty nice. It's like, hey, Uncle Sam gets that, but here I am. I'm driving the economy. I get to call myself, essential hero or something. It's a pride thing. So I don't necessarily mind it.
So I haven't, as I said earlier, played with stocks before. So this is the first time. In my job doing sales, and I live in California, we have the highest income tax anywhere in the U.S. States like Florida, Texas don't have income tax. So things like that obviously make a difference. Being in sales, you do commission, and commission tax pretty high. So historically, I've probably got between $3,000 to $5,000 back in taxes, which is fantastic. I really enjoy the opportunity to see that. I haven't taken anything out of the stock market. It's just I bought stock, then sold it, then re-brought it in the different stocks. I'm probably going to owe taxes. So for me personally, hearing Scott talk about it is really important, because this is going to be something that I need to know and learn. And Danny, if you're out there listening, my old housemate, you guys heard him on the first podcast talk about basic stock terms. Hopefully you can do my taxes again. I appreciate it. But I'm going to need to probably owe taxes. So I need to do what Scott said and say, hey, make sure you have enough money in your funds, because you're going to owe money, things like that. Sam, John, or Natalie, anything to add?
I mean, just realize if you're owing taxes, props to you, right? It's a good thing that, if you're owing because you made so much money on investment, that's good on you. So, if you don't have funds, like Scott said, you've got to be prepared early on. But, you can do installment payment to IRS if you can't come up with big chunk of cash right there and then to pay off your taxes, do installment payment. At the end of the day, it's, you're making money and it's just part of the process. So just always realize you got to pay taxes, pay your taxes, and prepare early, I guess.
I think for me, I haven't really gone through the tax cycle with stock investing yet, so I'm looking to Scott and others to help through that process. So I don't really know, but I'm curious. I know Jessica is the newest of our stonk members. Jess, what have you learned in the last couple of weeks as you've tried to become more knowledgeable about investing?
Yeah, so I kind of did what you did, Natalie, where I read that Stock for Dummies and different things like that. But the biggest thing is just kind of like understanding how to almost like set out your balance sheet first and understand your financial situation. That's what I've been doing the past week, kind of understanding that before even investing in stocks, etc. Because again, I do have like my IRA and all that good stuff, so I'm trying to see everything that I have, understanding that, and then just deciding between, am I trying to do swing trading like you guys, some of that, or do I want to hold on to it for a couple of years, etc. And then just different, like what's an ETF stock, just different things like that. That's what I've been learning. So very, very basic things like that.
Leap of Faith fans, excuse me for interrupting the podcast, but boy, do I have an exciting announcement for you. The YouTube channel for the Leap of Faith is now live. I'm so excited to share this with you. There will be videos coming out every week, 2-3 times a week. Every Tuesday will be Tough Tuesday, where I will share a workout video. It will be with weights, some videos will be without weights, full workout routines, different types of workouts for you to hit your New Year's resolution and get fit. We'll have nutrition videos. We'll have mindfulness videos every Friday to help you with stress relief and relaxation. We will have vlog videos every month around how to start a podcast, trips taken, how to get into sales, and everything around this podcast. You asked for it, I delivered. Please go subscribe to the YouTube channel. Do it by going any of the social media channels at Leap of Faith Pod. Type in Leap of Faith on YouTube. Look at all the links. Go ahead and check it out. I already have 100 videos posted. I've been creating so much content for you, and I just posted it all live for you now. Go check it out. Leap of Faith on YouTube is now live. Please go subscribe. Now back to the podcast. Enjoy.
Do any of you have ETFs in your portfolio?
I do not.
So I do.
And what made you want to go with that?
So I have ETFs and index funds, I think. I just hear that's a really good way, just from a safer route, because they say if you just keep adding to that, over the next 10 years, that will accumulate a lot of wealth. So that's just kind of like, here's my money that I keep, that I never look at, essentially, Randy. That's where I keep those two funds.
Smart. And I've heard that as well, that ETFs are like the long-term play. But if you want something that could be a quicker buck, like QuantumScape, then you go ahead and use it.
So I have my ETF fund. So I have about 80,000 from like those funds, my IRA, and then my 401k. So I've got quite a bit. I just don't have any stocks, and then that's why I'm trying to understand this side of the market.
I have a question for you guys. So I just can't get off this QuantumScape hype, to be honest, because I made so much money on it. And so every time it drops, I'm like, okay, I'm going to buy more, because I actually truly believe it's going to be a $250, $300 stock within 6 or a year from now. And so, but I know you've all experienced that with different stocks. Natalie's got Sedge, and Scott's making whatever he's making with whatever stock he has Intel on. And so I'm curious, do you guys ever get that high from that one stock, and you're just so tied to it, and you just feel like you want to buy more of it? I just need to get off this high, I feel like, but I just have a hard time looking at any other stocks, because I feel like this is the one for me. So have you guys ever experienced that?
So that's why I want to ask you, John, because I'm curious about that, because I want to look at quantum space, because I've seen it and I know what you're talking about from the essentially kind of them building that battery, that EV battery. But if I wanted to get in right now, how do I decide? Because I know it's like a negative today, but I guess if you go and look back, John, do you go, okay, I bought in at this price, it's a little higher right now, but in the negative, I'll go buy now? How do you determine that?
I think, with a lot of these EV related stocks, there's always going to be a correction period. Like right now, QuantumScape is in that correction because it went up to like 130, 135. Now it's corrected down to 99 today. But it'll go up again, but then it'll get corrected again because there's so much hype around this Tesla and EV industry that people will just jump on it and then realize, hey, this is way too high, and then a bunch of people will sell it off. And so it'll kind of repeat that cycle. And so for me, I try not to look at that. Am I buying it too high or too low? I try to look at, okay, what's the potential? Because, 5 years from now, I think EVs are going to be dominating the market. And so maybe, it doesn't matter because 5 years from now, maybe I make $100 more or $100 less, but $100 really doesn't make that much of a difference 5 years from now. And so I just try to look at the long-term play. Like, you buy it as a 99 today, or you buy it as 120 tomorrow. Next week, if that makes a difference, but 10 years from now, does that extra $20 or $30, does that actually make that much difference? And so that's kind of how I look at it is, look at the industry, what's the potential.
Okay. So you're saying I should buy the $99 today. Got it.
Maybe want to go buy some right now.
I know. I went to go buy it and I was kind of learning about it, but it was higher price last week. So I was like, let me ask John when we get on this call.
Hey, but again, like I said this earlier, I don't know what's going to happen to it. It might bankrupt next week. And so, but I have faith that it'll go up. But like I said earlier, I have this like hesitancy of bringing up stocks to suggest people to buy because I just, I would hate for it to drop tomorrow. And I'm like, sorry, Jess. But then again, it's your call. So.
Yeah, I don't look at what the projected numbers should be, and maybe that's where my next evolution in stocks would be is like, hey, what's the value it's at right now? What is the cap that they're projecting it to be? I look at the market as John kind of does, like with Square, just knowing that cryptocurrency is going to be super big, just knowing that people are going virtual, same with like Spotify, same with the gambling market. I just try to get in now, just knowing that I'm not trying to use this money to do a day trading or anything. It's just going to stay here for 5 to 10 years. If I think that the market's going to be there, I just put the money in now with what I'm able to provide.
And I've got a question. So what are the methodologies that you guys use for deciding what stock to buy? So for me, for example, I typically, with the exception of when John or Natalie, when they give me just, it's just purely peer pressure and I'll just buy whatever they tell me. But for the most part, I will always choose something that I would, that I agree with the company and I would buy it myself. So if it's, something like if I wanted to, it's like, oh, I'd love to buy a Tesla, or I like going on Carnival Cruise Lines. So it's things I would buy, for ones, for example, like I don't necessarily like Disney movies. So I don't like Disney stock, so I wouldn't buy it. But for ones that, like with QuantumScape and things like that, I'm curious, like, are you picking things that you just think are going to be big winners, or do you think that the company is going to last? What are you choosing? What are you buying on?
I feel like I said this earlier. I feel like for me, it's sort of similar, like, what would I want? What would I use? What do I think might be like a disruptor in a market? I know recently I've been really bullish on Lemonade, which, for listeners that don't know, is a AI-backed insurance company. I think it's going to continue to grow. So I just try to look at where the businesses are currently and then how they might change in the future or what I think people would invest in. I think if I'm going to look at insurance companies, I want to look at the one that's going to be, the most disruptive in the market, because that's probably going to continue to grow compared to a legacy one. So I feel like several factors go into it, but just trying to look at good long-term plays.
I look for, like I mentioned before, I look for beatdowns. I look for anyone that's coming off a bad earnings call. When I'm looking at charts, which is a very, very high-level chart reader from like my perspective, I try to look at if they're overbought, oversold, try to catch it when it's, trending up, but not in the oversold bucket. What else? Look for companies with good growth. Look for companies that are going to be around for a long time, like your Fortune 500, like your Cisco's, right? And then sometimes, honestly, to be completely honest, sometimes it's just a gamble of going on what people are talking about in the chat. Lemonade, for one. I was driving around to North Carolina or up to Jacksonville. I just bought some just because everyone else is buying some. So like Scott mentioned, the peer pressure that this group provides, sometimes turns out pretty good.
Yeah, and for me, I think it's so that my decisions are based off of a smart or data-backed information, but just what I'm currently betting on is 5G, AI, and renewable energy for the future, and I think there's a lot of growth in that, but I might be completely wrong, and so that's just me thinking that I'm reading the trend of what's going to happen, me thinking that I think I know where things are headed. But I also like to buy things that I always use, like you mentioned, Scott, like Target, Walmart, Costco, Amazon. I have those as a safe bet for 20, 30 year long-term investment. But yeah, that's kind of how I make my decision.
I think also, with this whole pandemic, how things are going more digital was a big factor. Like I was investing in Shopify towards the beginning because I knew all of these companies were going to be building websites for online shopping. So I think that some of that is a factor as well, just what's going on in the world and how that's impacting business.
I think that's the perfect segue as I was trying to say here. So you guys already led me down that path. You guys are great podcast. 2021 bets. What are we thinking is going to be really good stocks for 2021 into the future? It sounds like some of the stuff we already talked about, renewable energy, gambling, online businesses that you don't need to have a physical brick and mortar store. Anything else that you guys have specifically in sectors or a certain type of stock potentially that you're like, hey, I'm all in for?
I'm big into airlines, travel. So Boeing, even ones like Live, LYV. So the like Ticketmaster ones when people start going out and starting to play again. I really like those ones. And then also anything that's infrastructure. There's so many good companies right now that are going to be, I think, will be long-term really strong ones for any kind of rebuilding, things like roads, bridges, any kind of contract work, things like that. Those are ones I really like.
Yeah, that's a good point. Is we're moving into a new federal government with Joe Biden now being the president. What are some of his policies? What's he going to enact versus what President Trump enacted? What's he going for? So we know that Biden has already talked about renewable energy. That's why you probably see that market much higher with him being president, where Trump, he wasn't as much of a renewable energy fan. Those market caps probably are lower under his presidency. So you have to also look at, besides what is the economy doing, what is the overall federal government macroeconomic issues, how are they playing a part? We all work for Cisco, unfortunately, besides for Sam, and we see that in our monthly stock market for Cisco is when there's global issues happening and say something's happening in China and we can't get stuff from China over to America for Cisco products, our stock goes down because that's a hit to our bottom line. We're on the security portion of it mainly, so it's good to see securities doing well, but Cisco itself is such a big company that we have to look at the overall picture. So I think that's what Scott's trying to say as well.
A stock that I'm currently looking at right now as a potential winner is C3AI. They also IPO'd the same week as Airbnb and DoorDash, and they're actually the biggest winner of that IPO week. And so it's the CEO is Tom Siebel. He's and I think Baker Hughes is spending like $44 million using their software every year. And so they are an AI company. They go under AI ticker. But that's a stock that I think will win big next year because so they help other companies build AI platforms for their services and products. And so, like I mentioned earlier, I think AI, renewable energy, that's kind of where I'm hoping a lot of wins come from next year. So we'll see. But like Scott mentioned, I think you can't go wrong with travel because next year travel is just going to go up. And so I think you can't go wrong with that next year either.
Yeah, so that's a good point we haven't talked about. To take it back for a second, the DoorDash and the Airbnb IPOs, they were supposed to be like $60, $80 when they hit the Robinhood, Charles Schwab accounts type of thing, like 140 to 160. So like anyone can answer this. Why does that happen? Why does it say that in the news it'll come in at $70, but you can't buy it till it hits obviously your app and double the price? And why did we think it came in so high? And is it going to go down, or do you have to just buy it now knowing it'll go up? So giving people advice there.
Yeah, John, give us some insights on when to buy Airbnb.
So I tend to buy things at its peak, and then so I bought Airbnb the day it IPO'd, and I bought it at 157, and because I felt like it was gonna go. I thought it was gonna hit 200, and I thought it would hit 200 and drop. And so my plan was to buy it at 157, sell it at 200, and then when it drops to like 130, 120, buy it again. Because I love Airbnb, but it didn't happen. But then, as soon as I bought it, it just tanked, and then it went back up to like 167. I think it hit 170. Now it dropped again. But I think people are familiar with names like DoorDash and Airbnb, and so they jump on it, and realizing people like me, hey, I think it's going to go up. But the hard reality is that it's not always going to go up right away. And so, but I think patience is really the name of the game. You've got to be patient with it. I think Airbnb is eventually going to be $300 around that range, I think. And so it's probably not a bad idea to get into it right now. But I think, like I said earlier, if you were trying to do short term, it's so easy to get caught up on the day to day. But if you look at long term and realize that company is going to be around for a while and they're evolving with time. And so, I guess I don't have a short answer for why does that happen, but because I'm a victim to what happened. But you just gotta be patient with it, I guess.
Yeah, and I think that's a good point. You said like Airbnb, 160, like the news says coming in at 70, 80. We know when people start traveling again, that's going to be there. Same with the cruise lines, like getting in now when it's maybe 30, 40, maybe you see it stay steady for 3 months, but just knowing when cruise is going up in next summer, 2 years from now, you're probably going to get double. So it's those long-term investments, banking on it. Now, if you're trying to do short-term investments, that's, again, what John just said, is that's going to be hard, and you have to be playing day by day. And if that's not your day job, then it's going to be very tough for you to keep on track of. And that's where actually I'm putting my money right now is the gambling. I talked about the cruise lines and also the AI technology, renewable energy. I'm kind of in a holding period right now while doing all that and just putting into those sectors and just letting it ride, especially we always see stock market fluctuations when the new government comes in. So playing out how the first half of the year, how does the vaccine turn out? Are we able to get the economy going? Thank God the stimulus package got passed, so that's going to really help. Even though the stock market's down since this got passed, people probably selling some stock off, but in the long run, it's going to really help everybody.
What stocks are y'all most excited about for this next year?
Royal Caribbean, Norwegian Cruise Lines, and Carnival Cruise Lines.
The cruise lines, exactly.
Yeah. Cruise lines, that's like, I'm never going to sell those. Those are paying for my college or for my kids' college education.
One of the ones that I've been looking at, I don't know if you guys have heard about, is Tencent. And then another company, it's To Take International. They're both like video game type companies. Have you guys heard of those?
I have not.
Like with Riot Games and all that.
Yeah, Tencent's huge. Tencent, they're the ones that do League of Legends. So.
Yeah, so I went to their League of Legends office last year when I was in LA, but I bought their stocks because they're one, like they say, to watch out for, essentially, just because they're going to move up in the world, who knows. But there's a couple of things like from the bear market that it's saying, but that's one that I invested in, if you guys have seen that one. I'm hearing a lot about video games and all that stuff.
Esports. So if I look at Tencent right now,
Yes.
They're year to date, they were at 50, now they're at like 68, so they've gone up $18 over the course of the year. Not crazy bad, not crazy good. You can go pwn some noobs at League of Legends, Jessica.
I know.
What about yourself, Natalie? What are you looking into?
I know I mentioned Lemonade earlier. I'm really excited about that one, which, as John mentioned, AI is big, so that's an AI-backed one. I'm also looking at Fiverr, it connects buyers and sellers for digital services. So I've used it personally for like resume stuff and, online web design or really anything you need. So that's what I'm looking at. And then Shopify, again, just digital platforms for buying and creating websites. Those are three that I think will be really big in 2021.
I was looking at Fiverr too, but I think right now it's priced a little bit high, and it's actually dropped significantly the past week. So it's something that would be really good to get into.
I feel like that's a good one to have for, I don't know, a couple years. I don't really keep stocks that long, but I feel like if you did, it would pay off.
Yeah, especially started the year at $25 and now it's at 200. So again, as Natalie said, Fiverr, it's a marketplace for people to trade commodities, like for, hey, who can edit my videos, who can help with my resumes, who can do XYZ, online marketplace. So obviously during shutdowns when you can't do a lot, massive. So getting in beginning of the year would have been great. Right now it's probably going to be a holding period and see what happens as it moves on.
I feel like there are also some really big ones, Zoom, where there are competitors in the day-to-day, so we don't really want to go put our money with them, but they, their stock does incredibly well. So I feel like some of that personal stuff kind of plays into effect as well.
How do you guys know when to sell? Because Pinterest comes to mind, because I bought Pinterest when it was like $40 and I sold it thinking, hey, I probably hit the peak, but it kept going up. And so I was like, man, I should have held on to it. But I don't usually sell stocks very often. It's very rare that I sell anything. So how do you know when to sell? How do you know, it's the right time to sell?
I've held Pinterest through the next year, honestly. But I feel like it's like gut feeling almost. I don't know.
So I guess I'm going to contradict Natalie. I had Zoom, and I've had Zoom through this quarantine, so it's done very well for me here. But now that you're going back to the vaccine coming out, the Zoom stock the past month has really fallen down like $200. So I'd rather take that money out now and invest into something that's lower price and has a more upside in renewable energy, where Zoom is trying to expand itself, but we probably saw the peak of it for the while. But I usually don't sell stock unless I need to buy something, say it's a car, a house, purchase something. For me, the stock market's really about putting money in there instead of a savings where it's not accruing interest to the degree that the stock market is. So that way, when there's something big that I want to do, I earn money versus it just being in a savings account.
I think I often look for the best opportunities. So if I have stocks and I think they'll keep doing well, that's great. But sometimes I have stocks that do well, but I think others would do better. And so I'll sell them off to get the ones that I think will be better performing.
I go in with a plan. So if I'm swing trading, I go in, I try to get in at oversold and ride it until it's overbought. Pretty much, because when it's overbought, usually I'd see a trend of spikeability, right? So if it goes from oversold to overbought, great, perfect. I'm going to ride it from the bottom to the top of that. And that's why I know when to get out. I try not to get too emotionally attached to the stocks, because that's when you make bad decisions and maybe hold on to things just because you want to believe that's going to go back up. So that's kind of my philosophy when it comes to buying and selling stocks, unless it's like one of those bigger ones like a Tesla or Amazon or an Apple. Like one of those you just want to hold on to for a while. But the majority of the trading that I do is just overbought or oversold to overbought. Riding the wave and then getting out, taking guaranteed profits, unless it's like crazily explosive. And then I waited, I prefer it to Shopify. I got in pretty early there, but then waited it out, took some profits because I knew there was a lot of upside potential, especially with COVID.
We'll do one last round robin. We'll start with Jessica and go all the way down. Final thoughts, anything that was a key point here you heard, anything for the audience that you think is a key point for them to know?
I think just kind of learning like the different methodology that you guys are doing when you guys are picking the stocks was really interesting. And then just hearing how you guys are picking them, whether or not it's an industry that you guys think is like moving, like EV, for example. I think what I also learned is just like you said, like holding on to it, Natalie, or towards another one that's actually going to perform better, but not getting attached to it, essentially. I learned that was really insightful. And then just hearing, again, just the different names that we think are going to be 2021, I thought that was really interesting to watch out for. The one I am curious about is Instacart, though. Is anyone curious about the IPO when that comes out? Because I think that one's going to do good.
When's their IPO?
It's supposed to come out in the next couple months. Do you guys use that at all?
I personally haven't. This says their IPO is planning for $30 billion, so that is going to be a pretty good IPO.
It's Uber for your groceries, but it's so nice.
Yeah, I think that's going to be a good one for sure.
Keep my eyes out, that and Tailwind.
John, how about yourself? Final thoughts.
I would say do your research, because you never, at least the way I look at it, is you never want stocks to be a gambling experience. You don't want it to be a gamble. So do your research. Realize who's backing it, understand the industry, understand who the CEO is, what their outlook is, and maybe you don't have to understand like all of their financials, but do your research so you at least feel like you know why you're investing in them. And so if it does well, you know why. And I think that takes a lot of practice and experience. And once you get comfortable with that, you realize what to look for, and you know how to research a company before you buy their stock. But I think that's the main thing for me is do your research so you feel like you know why it's dropping or why it's going up. And sometimes you don't know why, even though you do your research, but get comfortable and get familiar with how to research a company and don't approach it like a gamble.
Very wise words. Awesome. Thank you so much. Natalie?
I love this group. I mean, none of us were finance majors to my knowledge. We're all in tech sales, technology, and I think it's interesting just everyone has different methods, and I think we all learn from each other. So I hope your audience learned from how we do stuff too. But like John said, just do some research and try to have an idea of why you're investing and what you're investing in, because it's still money at the end of the day. I know Scott was calling it magic money earlier, and it can kind of turn into that. But you want to be able to get your investments out from what you put in. So just make sure you know what you're doing when you're researching your companies and investing in them.
Can we trademark that term, magic money, and use that for stock watchers?
Scott, have you already trademarked it?
Oh, my wife has trademarked the word magic numbers. It's magic numbers, and that's actually owned by Jessica. So, yeah, definitely not negotiable.
Where can we buy merchandise at?
Yeah, the merch is going to be on my store. It's actually going to be on my Instacart. It's going to be on an Instacart or Shopify. It's going to be on one of those.
There you go. That's a win-win.
Yeah.
Scott, final word, and we'll move to Sam.
Yep. I would say more than anything else, take the emotion out of it, especially if you are somebody that's, maybe political or you watch a lot of the news. It doesn't serve you, beneficially to be able to make stock decisions based off of whatever the news says of the day. Because just remember, other people are making smarter decisions based off of what the market's doing, not so much of what their feeling is based off of the perception of what's happening in the news. So that's one that I found pretty early on, is if you are trying to just like be glued to a television and say, oh, that's not good news, let me sell it, you could potentially miss out on a lot of good things by just holding. If you make a decision, you maybe write it down on a piece of paper, like I am buying X number of shares of this whatever ticker, and I'm going to hold this for this long. Put it in your pocket, write it in your phone, make a little daily notification. Do something so you can take the emotion out of it, because you just like what John said, I think is great advice, is research before you jump in. And then once you've made the decision that you're going to write it, then you write it. And so if you can be not only smart approaching it, also knowing what your long-term goal is, and that will also make it so when you're looking at it, over the day, it might go up and down, but when you see it over the month, you're like, I'm winning. And that's what you have to make sure you're taking it as analytical as possible. I make jokes about, my about magic numbers and things like that, but in the end, I've made decisions of what I will allow myself to do, and I'm pretty good at keeping those rules, unless it's a hot take from John and Natalie. So, which those rules go out the window.
Awesome. Sam?
Pretty much echoing everyone else that's spoken before me. Do your research, keep your emotions out of it, and have a game plan. Most importantly, whether that's like setting stop losses at 10% or whatever it may be, go into it with a game plan, especially at the start, before you really know what you're getting yourself into. It will help you minimize your losses and keep you in the game longer.
Perfect. I will just say ditto to everything, so I've become the biggest knowledge master out there because I got everybody's words. Thank you to all my podcast guests this week, Jessica, John, Natalie, Sam, and Scott, for coming on. This has been 2020 Stock Review, 2021 Stock Preview. Hopefully you learned kind of the mindset of what we do. Again, full disclaimer, we're not financial advisors, we're not day traders, things like that. It's what we see in our personal life and what we're doing and we talk about. It's awesome to have this group to be able to bounce ideas off of, make money off of when they tell you stuff. Listen the first time, not a month later. It's at the peak, things like that. So hopefully you have your group. If you guys want any advice, reach out to me, reach out to anybody on this podcast. We're happy to give a little bit more that we can. This is the Leap of Faith podcast. My name is Randy Silver. Thank you so much for listening this week. And now we'll do the sign off. Hopefully, Natalie and Jessica, you guys remember the sign off. We'll do it. So everybody follow me. Stay healthy.
Stay healthy.
Stay wealthy.
Stay wealthy.
Stay wealthy.
Stay wealthy.
Have a good week, fans.
Have a good week.
Have a good week, fans.
And you know the words we say. Deuces! No deuces? Fine. Bye, everybody.